My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Good evening. I'm Jim Cramer, and welcome to my world. We call my world Mad Money. That was March 14th, 2005, the first time I greeted Cramerica from our capital, Studio C at CNBC headquarters. Ever since that day, this has been our home base. And tonight marks my last time coming to you from this very set. Joining me Monday, where it'll be, I can't believe it's happening. Yep, on Monday, I'm moving to the floor of the New York Stock Exchange for Mad Money. And while the location may be changing, for 17 years, our mission has never, ever changed. That's right. Other people want to make friends. I just want to help you make money. My job is not just to entertain, but to teach and educate. And I'll be doing it down there the exact same way I do it here. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. And yes, I am a little wistful. All right, I know everything seems out of control. Yes, the Fed might need to cause a recession to stamp out inflation. But no, that doesn't mean it's the end of the world for stocks, even as it's obviously not great for the averages. Another lackluster day. Dow sinking 143 points. It was much lower at one point. S&P declining 0.30%, and the Nasdaq actually inching up 0.03%. You know, the latter was another remarkable recovery from the abyss, just like yesterday's session. The fact is, if you own stocks right now, the odds favor that you're going to lose money. So why not just get out and circle back at a better moment? Totally logical question. The illogical answer? Because losing money in markets like this one is actually part of the process. Don't get me wrong, I'd love to sidestep this kind of action. But most people, including me, just aren't nimble enough to pull that off, which is why you're better staying the course. At times like this, we forget what it's like to make money. We wake up and wonder not what the opportunity is, but how much we're going to lose today. Yeah, I joke with the security guards at the New York Stock Exchange almost every morning that the Dow futures are only down 300 points. Yeah, it's gotten that bad. But second, we have to worry that the endless nature of the sell-off is now becoming self-fulfilling. Just like the dot-com collapse in 2000 and 2001, there are just fewer and fewer and fewer people each day who care about stocks. They're now past the denial phase and are in the acceptance mode. The money's lost. It's not coming back. Those who thought they could make a living, say, by trading, by day trading, now recognize they're going to have to find a real job. And by the way, they want to be paid in cash, not cash in stock, because they know better. They are done. They are out. Hey, by the way, I would like to know how much real activity there might be, say, at Robinhood with all those 20 million accounts. I mean, how many kids also got blown out by the crypto cuttos? Finally, people are just plain mad. They're bitter. They want someone to blame. There's a big construction project going on downtown next to our soon-to-be new home at the New York Stock Exchange. Every morning, between my coffee guy and my office construction workers like to talk with me. They know I have a show. When I wanted them to buy what we would all consider blue-chip stocks, they wanted to buy the SPACs or the new issues when times were good, a lot of that Cathie Wood junk. And now they think the whole shooting match is just one big con game. These days, we don't talk about stocks at all. We talk about the Mets, maybe the Phils. Good day, we talk about the Eagles. I've been on Twitter for 14 years, and it was always fun to look at my mentions column. I like to answer people. Not anymore. I think the nastiness has more to do with the anger toward Jimmy Chill as someone who stands for the market. And the market's no fun anymore. And who do they blame? Me. Believe it or not, I don't control the stock market, at least not since I resigned from my position in the Illuminati. If I write that I have great zucchinis, they want to short zucchinis. Now, let me be really clear. All of this is very typical of what happens when you're in the midst of a miserable bear market. I got the same kind of flack in 2000. Yeah, 2000, 22 years ago. Even though I told everyone to sell right before the peak, it didn't matter. I was hated. It came with the territory. I am a top 10 hated figure at Twitter. Now, am I proud of that? I'm from Philly. You bet I am. All right, now, how long can this last? I mean, not just the hatred toward me. Well, it's tough to answer because it's a moving target. Here's what I mean. Look at this chart. Now, if this were a stock and I came to you and said, you know what? I want you to buy some of this right here. Let's take some down. I know exactly what you would say. You'd say that darn Jimmy Chill. I hate him so much. He now comes to me now, after this, with an unsustainable, insane rally that has to end badly, and now he tells me to buy with a splat, not a gentle slope. But this isn't a stock. You know what this chart? It's a chart of the PPI, the thing that spooked everybody today. Yeah, the producer price index. It's a key gauge of inflation. We're all so worried about it, but if this were a stock, you wouldn't buy it, you'd sell it, you'd short it. So come on, let's start getting serious about whether this is the beginning or the end. It's not going to stay there. All right, now I got another. All right. Does this one look like it's in an uncontrollable rally phase? I mean, wow, this thing's insane. It's going to the moon. I got to get in. Or is this a chart of something that's done absolutely nothing that we shouldn't even be worried about? We shouldn't think about. Well, guess what? Look what this chart is. It's oil. When oil was going up every day, it controlled the debate. Everyone was scared. Ooh, $5. I paid $5.50. Ooh, I paid $100. My guy pays $85. Wow, I can't believe I did that. Oh, geez, I'm voting for this guy. All right, now look. It stood for inflation, right? Well, now it's coming down hard, and the price at the pump is coming down even harder. The oil stocks are horrendous. I know. I own a bunch of them for the trust. When it goes down, everyone looks the other way. When it goes up, it's all we talk about. You think that's fair? I think it's silly. I think it's stupid. Okay, one more. All we've been hearing about today is that the food prices, listen, that kind of agriculture, gotten out of control, right? I mean, no kidding. I've been in a supermarket. Hey, flying steak, $17. I can't believe it. I can do all that stuff. Food, though, doesn't come from the sky. This is not the book of Exodus, where we get manna from heaven. It doesn't come from heaven. But I care about the future of food, not the food I bought last night at King's. Food starts as agriculture. Look at this chart. This is what I call an ugly chart. I think this thing's going lower. So do you. If I came to you with this one, you would say, oh, there goes Jimmy Chill again, trying to take my hard-earned dollars. Let's see what this chart is. Oh, it's a chart of agriculture. All the things that go into food, and it's coming down huge. And it looks like a short to me. Yeah, it's a forecast of the price of food to come. Now I'm really shaking. Three charts that reflect crucial parts of the inflation equation that all we ever do is talk about, all are pointing toward the idea that inflation's peaking, although I still favor one last 100 basis point rate hike from the Fed just to make sure. There were a couple of news outlets that were making fun of me saying, Cramer thinks it's peaking. No, Cramer isn't thinking anything. Cramer's looking at darn pictures, and that's what he's looking at. The important thing, though, is that the goalposts have changed again. We hope that we get producer price index numbers, that we hope to get a peak in oil. We hope to get a peak in food. Looking at these charts, I think, well, it's obvious what's happened, right? It's obvious when you look at the charts. They're all peaking, right? PPI could be peaking right around here. But the goalposts have changed because now Wall Street says all this stuff doesn't matter because it's only happening because we're headed for a recession. 6 months ago, these peaks would have been ridiculously bullish, but now they're just pictographs of a weakening economy. Now, you change the goalposts, change the goalposts, change the goalposts. There's truth to the picks. All right, now let's go back to the misery that I'm talking about. We've been going down and down and down and down again because professional money managers want to get ahead of everybody else who's trying to sell. For example, the hedge fund playbook says that you have to dump the auto stocks no matter what's going on in the slowdown, no matter how well they're doing. Why not? The odds favor getting out. They favor when it's good. But what if it's not good? I mean, the stock, not the companies. Well, what if the recession has beaten us to it? What if GM stock, which trades at less than 5 times earnings, an incredible stock that trades at less than 5 times earnings, okay, GM? It totally reflects a recession, if you ask me. What happens if we don't get a full-blown horrible recession? I mean, it's got a giant full line of pretty cool electric vehicles coming. It's got the auto drive stuff that I've seen in action. We have GM's chair and CEO, Mary Barra, on later tonight. You're going to hear a dazzling story of a turnaround, but nobody cares. I mean, but you keep me away from that. Don't you know that there's a recession? Ouch! We got to get a new set. This thing just cut my arm. All right, I come back and I say, just wait. There will come a day when you need to own GM because this is the kind of stock that goes up 20% in 3 sessions. And if you don't hold it for that one day and miss those 3 sessions, well, you'll miss the whole move. Endure the pain for those 3 sessions. Of course, if you know which 3 days that is, well, you can trade it in and out. Nobody's that good. Now, before you say I'm out of my mind, let alone off my meds, can I tell you that this very morning when the tech-heavy NASDAQ was down 2%, I bumped into a guy at the construction site who usually asks me about NASDAQ stocks, including one we have on tonight, Plug Power. He gave me a nice wave, sweet, good, terrific guy. But when I wanted to tell him that Plug was on, I hesitated. The NASDAQ was about to take your head off again. I didn't want the hard hat hitting me, right? I mean, Plug Power, maybe it hurt. Instead, what happens? The NASDAQ rallies. The goalposts move back a hair. The bottom line, I'm sure we aren't done with this misery. But I'm also sure that one day the goalposts will be at the end of the field, and all will be well. I just don't know when. On Mad Money tonight, General Motors is planning for an electrified future. So what strides has the company made in pursuit to dominate the EV world? I am talking exclusively to the CEO. Then there are a handful of stocks that have given up all of their COVID gains. I'm taking a closer look at the list and giving you my take. And from EVs to green hydrogen, yes, indeed, we're going to learn more about Plug Power's plan to expand the company's top brass. So stay with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.